Retirement planning isn't just about saving money, it's about securing financial independence and peace of mind. With rising prices and increasing medical expenses and changing lifestyles, having a solid corpus is crucial to maintain your desired standard of living. But the big question is, how much should you invest and when should you start? The answer, the earlier the better. But let's break it down further. Suppose you aim to accumulate 5 crores for your retirement at age 60. How does the investment strategy change if you start at 25, 35 or 45 years old? So let's find out in an in-depth analysis in this video. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So first, if you invest at age 25, whereas you have the early bird advantage. Like imagine you're 25-year-old earning 40,000 rupees per month. If you start a systematic investment plan, which is SIP, in an equity mutual fund with an expected 12% annual return, how much should you invest? So your monthly SIP investment could be 9,070 rupees and your total investment over the next 35 years would be 38.10 lakh. And the corpus you would have at the age 60 is 5 crores. Why does this work? Because of compounding. The earlier you start, the more time your money gets to grow exponentially. With just 9,070 rupees per month, you can build a 5 crore retirement fund, all thanks to time being on your side. And if you start investing at 35, things change. Now you only have 25 years to reach the same 5 crore target. So the amount you need to invest increases significantly. So your monthly SIP investment jumps from 9k to 29,345 rupees. So your total investment over 25 years would be 88 lakhs. So the corpus at age 60 would be 5 years. Can you see the difference? Starting just 10 years later means you now have to invest more than 3 times what a 25-year-old needs to. This is the real cost of delayed investing. For those starting at 45-year-old, retirement is just 15 years away. So what happens to your investment requirements? Accumulate the same 5 crores, your monthly SIP jumps dramatically. So your monthly SIP investment now jumps to 1,04,950 rupees and your total investment over the next 15 years would be 1.9 crores. The corpus at age 60 would be 5 crores. At this stage, investing over 1 lakh per month is almost impractical for most people. So the lesson, starting early reduces the financial burden significantly. But wait, is 5 crores even enough for retirement? 5 crores sounds like a lot, but will it be enough in 20 to 30 years? With the average inflation rate of 6 to 7% per year, 5 crores won't have the same purchasing power in the future. So with healthcare costs rising, medical emergencies are unpredictable and the treatment costs are only increasing. And as your income grows, spending habits also change. So will 5 crores be enough to support your desired post-retirement lifestyle? So how do you ensure financial security? You can plan conservatively by aiming for a higher retirement corpus and diversify your investments. Don't rely on just one asset class and reassess regularly. Stay on track with a certified financial planner. And why is starting early so important? One word: compounding. When you invest, your returns generate additional returns. Albert Einstein called compounding the eighth wonder of the world. The earlier you start, the less you need to invest each month. So as you can see from this tabular column, at 25, at the age of 35 and 45, your monthly SIP differs more and more because it jumps like from 9k to 29k and it jumps to 1 lakh at the age of 45. So your total investment also jumps from 38 lakhs to 88 lakhs to 1 crore. But you get the same corpus at 60, which is 5 crores. So the numbers speak for themselves. Compounding rewards those who start early. So not everyone can start investing at 25, but don't worry, there's a solution. So instead of investing 29,345 rupees at the age of 35, what if you started with 15,000 rupees and increased it by 10% every year. So, gradually increasing your SIP makes investing more manageable while still benefiting from compounding. This strategy works especially well if you are starting late but expect steady income growth. The earlier you start, the easier it is to build wealth. So, what is the final takeaway from this video? The best time to invest is now. At age 25, start with a modest SIP. If you are at the age 35, increase SIP strategically. But if you are at the age 45, be aggressive with step ups for SIPs. So, not sure how to plan your retirement? Then get a free consultation with one of our certified financial planner by clicking the link in the description and registering for it. So, let an expert help you build a secure future. Like, share, and subscribe to this video for more such smart investing tips. I will see you in the next video with much more interesting financial insights. Thank you for watching.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.